Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, May 2nd. And also, it's going to be Fed's Day, and we'll touch on that here in a moment here. But first, let's take a look here at the ADP employment numbers. So remember, this week we have not only the FOMC meeting, which you'll see right here. We'll have that statement later today. They began their two-day meeting yesterday, which the announcement will come out by 11 a.m. Pacific Standard Time. And we'll just touch on that right now since we're talking about it. So in that one, they're going to be releasing their statement. There's no expectation of a rate hike at this one. So far, there's expectations of 3 rate hikes for this year. We've already had one. Now, with the new stuff coming in, with PCE just coming in on Monday and bringing us close to the core coming at 1.9, the Fed target rate is 2%. We're practically there. Does that mean the Fed's going to start hiking rates at a more aggressive manner, or are they going to remain steady? They're going to be looking at the policy statements. They're also going to be looking at the dot plot. They're going to look at 2019, how many possible rate hikes in 2019 as well. So those are things they're going to be looking at mostly for the policy statement and also for the dot plot as to get a better view as to possible rate hikes in the amount of them and frequency of those. Now, to touch back onto ADP employment, we have the 3 job numbers this week. We have ADP begins today, and we have tomorrow weekly jobless claims, and then the Bureau of Labor Statistics on Fridays. Now, this one's not all important, but does give us some insight into the private job sector as to new job creations. Now, back in March, we had a revision. Was initially came out at 241,000, and it was reduced to 228,000. Was revised. Now, forecast for April came in at was 200,000. It came in pretty close in line at 204,000 here. Now, this brings us to 7 consecutive months of over 200,000 new jobs created each month. That's fantastic here. We've had majority of the year actually. If you look at almost a 12-month period, we've had a couple more 200,000s in that period, and then we had a couple that are pretty close, like 100 in the 190,000 range there. I think we had one month that came in pretty disappointing. It was like around 96,000, which I think kind of shocked a lot of people. Other than that, we were pretty close to 200,000 almost for each month for the year. So kudos to all the employers out there, job creations out there, and putting people back to work. It's been a long time here. A lot of people, I think, were kind of losing faith since we've had this kind of prolonged, well, it hasn't technically been a recession, but it's been so stagnant that people just weren't or giving up, I think. So to kind of move on here, we'll look at the headline news. We got the stocks a little mixed so far this morning, but as I started doing this, I noticed it started moving negative. The Nasdaq was in positive territory, but it kind of just recently kind of moved into negative territory. So, but again, they're not kind of moving too much before the Fed release their statement. Now, of course, earnings reports are kind of dictating more the earlier episodes. Apple had some great earnings reports that came out after hours yesterday, and it's kind of helping the market a little bit today. It probably would be a lot worse if it wasn't for Apple's numbers that came up. But in any case, the big one at about 11 o'clock Pacific Standard Time, you'll probably see what the investors are going to do, which route they're going to go. We could go in a couple different directions, up or down on the stock market. So again, I think that's going to push the markets today is the policy statement and the dot plot map. So bond market, we've been in this range, or we've been kind of sideways pattern here. We're up for the day, but down from where we left off yesterday. So from this point where we left off yesterday, and here we're about 5 basis points different. So we're down about 5 basis points so far for the day, which basically gives us no difference in pricing in interest rates from where we left off yesterday. But again, we got to be cautious because we've been kind of saying that for a while, but we kind of went a little bit further down, and at some point it's going to give us, we're going to have the pricing is going to be pretty close, but be a little bit off from where we were. Now, what's holding us here is we got this floor support of the yields here, and the last 2 days is kind of held here, and we're at about 2.97, about where we left off yesterday as well. Now, if this can get pushed below here, if the yields can get pushed below, especially if after the FOMC announcement, if this can push us down here, this will help mortgage-backed securities go upwards here, and that will help improve interest rates as we speak. Now, if it goes the opposite direction, it goes up this way, again, this could push us back further down. So again, we're kind of in this middle conundrum here, and the FOMC could be the item that could push us one direction or the other direction. And again, it could be short-lived because the job numbers are coming out Friday, and depending on how hot they are, it could help or hurt us on the mortgage-backed security side. Now, on the stock side of things, sometimes good news is bad news as well. So we'll have to kind of wait and see how they react to it as well on Friday. So in any case, rates are today, so far this morning, about the same as where we left off. You may want to come over to Twitter, check out, see what the Fed statement states later on today. Follow me on Twitter here. I did put out a kind of interesting little graph on Twitter you could take a look at, and it basically shows a correlation between the unemployment rate and recessions. So there's been some speculation or talk about recessions, coming up, and a lot of people, forecasters, are kind of projecting it, making their projections. So you can base yours own, see what you think on it. But step over Twitter underneath Mike Bjork and find it and make your comments. All right, you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.